For today's Business Brief, we're joined by John Kehoe from the Australian Financial Review. John, let's start first of all with the ongoing reaction to the election. What have you made of it? It seems it's provided certainly a boost to the markets and possibly the property market as well. We see the front page of your paper today saying the poll has sparked demand for mortgages.
Yeah, certainly a post-election confidence bounce, I think, from stock market investors, but now we're also seeing it in the property market. The Commonwealth Bank CEO, Matt Commons, saying that they had their best week of mortgage applications last week in 6 months, up 10% on average. And I think it just goes to show that sort of the removal of some of the uncertainty heading into the election, a lot of people were expecting some changes, obviously potentially to negative gearing under Labor. Well, that's off the table now. So some of the downside risk taken away. And also some of the retailers as well. Jerry Harvey of Harvey Norman saying that consumer confidence is up a little bit better. And we saw that reflected in some figures this week as well, that consumers post the election are feeling a little more confident. Whether it's a short-term sugar hit or it's a more sustained trend, let's wait and see, because the economy still does face some challenging headwinds in the months to come.
Well, it certainly does, most notably out of the US and China. We're looking to the end of June for that face-to-face meeting between Trump and President Xi Jinping. But domestic concerns are one thing, but of course we are so dependent upon our trade relationship, most notably with China.
Absolutely, and that's the key one to watch, because if we have less global trade, then global growth is going to be lower, and ultimately that will flow through to the Australian economy. It is interesting, though, at the moment, the iron ore price has actually got up to $108 US a tonne, and that's the highest we've had in some years, and that's going to deliver a real boom to the budget bottom line, and also stock market investors who are invested in BHP and Rio Tinto, those shareholders as well. So it's funny, you've got this trade war, but because China's actually stimulating its economy, that creates more demand for iron ore to build steel, you know, for roads and bridges and buildings and these sort of things. At the same time, Brazil has an iron ore mine outed at the moment due to a disaster over there. So there's less supply from Brazil, which means they can buy more from Australia and the price can go up.
Yeah, that's, I guess, a short-term boost, but in the long term, we would want some resolution, wouldn't we? Yeah,
absolutely. I think absolutely that's a short-term panacea. You can't rely on the iron ore price staying above $100 a tonne, and in fact the budget, I think, has built it to gradually fall to around about $50 a tonne over the next few years as well. So the government's been reasonably conservative in its forecasts there.
The Energy Minister yesterday, and he's now Minister for Emissions Reduction, which are, you know, a lot of people saying makes sense because it brings climate and energy policy together, but it's not making a great deal of sense to the energy operators and retailers at this point. They still want a national framework within which to have that emissions reduction effort.
Yeah, energy company CEOs really pleading with the government to have some sort of national framework for energy policy and climate reduction, because they need the certainty to be able to invest, and they also believe that over time emissions need to be reduced more. But Angus Taylor essentially saying, we're sticking to our guns, we're not revisiting the National Energy Guarantee, the people voted for us. They said that they didn't want it, and he says now they've got a mandate. And I think you're going to see...
The issue for the government is there's not just one constituency that a government has to manage. There's also the business constituency, there's also the international constituency, and if the government wants a free trade agreement, for example, with the EU, which is worth billions, $15 billion is the estimate to the national economy, one would have thought that climate would have to be ticked off as well in terms of the government's approach.
Look, I think they're probably going to meet their emissions reductions targets from some of the carryover credits from Kyoto, the earlier sort of emissions reductions they've got.
But I wonder whether that will satisfy the Europeans.
That's true, because some countries do see that as almost a cheap or cheating way of getting to your sort of emissions reduction goal as well. So you're right, Kieran, they are having to manage a lot of different stakeholders in this. But I think the coalition feels vindicated, because we saw how well they did in Queensland, partly on the back of the Adani issue as well. So I just don't see them backing away on this issue anytime soon.
John Kehoe, great to see you. Talk to you soon.
Thanks, Kieran.